markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. FOMC Wednesday, the Dow, the S&P, NASDAQ at or near session highs. 43 minutes to go ahead of the closing bell. Let's get right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a late bid here in a choppy session. Dow's currently up 181 points. S&P's gained 30, while the NASDAQ is up by 96. The U.S. 10-year yield at 2.9%. Gold is down 25. Oil is in the red, but Bitcoin is trading little changed. Among the main 11 S&P sectors, only energy is in the red. And leaders to the upside in the Dow, UNH, Cisco, and Travelers, while Chevron fell 1.7% and led to the downside. Regarding the Fed minutes, many on the FOMC saw a significant risk of entrenched inflation. And in the commodities space, the U.S. and its allies discussed capping Russian oil at $40 to $60 a barrel. Wrapping things up, Rivian jumped 11% after boosting its electric vehicle output. Live from the First Word Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. Bloomberg Business Week brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. If we look at the news that we got this morning, one of the headlines that caught our eye was you have Amazon taking a stake in Grubhub. Let's break that down with Mandeep Singh. He is Senior Tech Industry Analyst at Bloomberg Intelligence, joining us live in the Bloomberg Interactive Broker Studio. Mandeep, great to see you. I guess my first question is, why Grubhub? Because there's a few of these food delivery services out there.
Well, so to give you some context, Grubhub was acquired by Just Eat Takeaway last year, and that acquisition did not pan out well. And so Just Eat being a UK company, they really wanted to expand in the US, but clearly the numbers suggest that Uber and DoorDash were both gaining share, and it was coming to a point where these companies could form a duopoly. I think what's happening here is Amazon realizes that, it's competing for driver supply with the same, and it's the same pool if you were to compare them to, what Grubhub and Uber and DoorDash are going after. It's like they realize that part of the reason why they can't find enough delivery workers is the reason because gig economy companies are doing so well. So at some level, they were already competing, but now this is their foray into adding delivery as well to the Prime offering.
Mandeep, what I find fascinating about this business is it seems like they're competing for share in a market for something that's really not yet profitable for any of these companies. Does it feel sort of like just a war of attrition among these companies to see who can last the longest and eventually, be the last company standing in this space?
Yeah, so you're right. The unit economics are still not there when it comes to food delivery. But Amazon was doing its own grocery delivery. So for them to branch into food delivery is not that big of a deal. And look, they're not acquiring a company. They're getting, the 2% stake at peanuts. So it's not a full-fledged acquisition compared to what Just Eat paid last year. But I think naturally it helps them make the Prime membership even more compelling. And now you have to think about a recessionary scenario. What are the subscriptions that consumers are likely to get rid of? If you are getting everything in Prime, whether it's grocery, food delivery, and all the e-commerce stuff that is a sticky subscription compared to an Uber or a DoorDash subscription where, it's just delivery. And so I think it makes that subscription more sticky, in my opinion.
Let's talk about the competitive landscape here, because obviously Uber has been trying to push into this space. DoorDash, too, already there. I mean, now you have Amazon coming in. What does it mean?
Well, so Amazon clearly can disrupt this market in the sense that no one has figured out a way to make delivery profitable. with Amazon bundling that in Prime, and they have movies and e-commerce delivery, and so with grocery and food delivery, they really are trying to make that Prime subscription like a Costco subscription, for lack of a better comparison. But I think that's where the bundling aspect becomes huge, and for the Uber and the DoorDash, they want to get to a subscription model, but I think it makes it all the more challenging given subscriptions are still a small portion of their overall customer base.
Mandeep, it's funny. Whenever I think of this industry, the food delivery industry, I conjure an image of Elon Musk sort of smirking in the background, because I feel like ultimately the big goal must be to get to driverless sort of automated vehicles and that sort of thing. How far away do you think that is for this industry? And would it really just, totally blow up the margins to more profitability than what we're seeing now?
Yeah, I think that is where every company wants to be when it comes to delivering food or groceries. But autonomous is still, at least based on our work, it's still at least 5 to 10 years out, and that too, you're not going to get to a perfect drone delivery. Maybe in certain type of use cases it may work, but for food delivery, picking the food from the restaurant and delivering it, those type of use cases may take more time. So clearly the unit economics are much better, but I think it may take a while to get there. And look, I think the current model where DoorDash and Uber charge a fee based on the amount of the order, that may actually be disrupted by Amazon, because Amazon may charge a flat fee per order. And so that is another risk for Uber and DoorDash going forward, because clearly Amazon doesn't care the size of the basket, when you're ordering that. And I think that could be
just in the last 30 seconds we have with you. Talk about this from the perspective of Grubhub, because like you said, I mean, that Just Eat's takeover, maybe it didn't go as well as they might have hoped.
Yeah, so look, I think Amazon, again, they're buying a 2% stake with warrants to expand it to 15%. So, and plus Amazon can't do a full-fledged acquisition anyways. There will be so many regulatory reviews and hurdles to overcome. So I think they have nothing to lose, and clearly it is a way for them to expand their customer footprint here in the U.S.
Nothing to lose for Amazon. Mandeep Singh, Senior Tech Industry Analyst from Bloomberg Intelligence, joining us in the Bloomberg Interactive Broker Studio, talking about Amazon taking a stake in Grubhub. Thank you so much. Well, we have much more news coming up. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Mike, I'm a little bit biased, but I think there is no better Apple reporter than Mark Gurman, and we're going to get to talk to him in just a minute.
Yeah, absolutely. He's got a story out today. Apple launches an iPhone security tool to block targeted attacks. So fascinated to hear what this is all about, Katie.
Yeah, we're going to dig into that. Let's just get over to Charlie Pellet for some news. Charlie, what's going on?
Well, let's go. Let's begin with Apple because we got Apple shares rallying now by 1.65%. More on that big Apple story coming up in just a moment. Do want to begin, though, in the United Kingdom, where Boris Johnson has told cabinet colleagues that he will not resign as Conservative leader and Prime Minister. This, according to an official, despite a slew of resignations today that threatened to make his position untenable. Stocks rose, treasuries slid as investors grappled with fresh economic data that showed slightly slower growth, prompting some to consider the Federal Reserve's reiterated hawkish stance in its June meeting minutes as outdated. It looks like the Fed is planning another hefty rate increase, and with more on that story and today's minutes, here's Bloomberg's Vinny Del Giudice.
Minutes of June's historic policy meeting indicate more action in the weeks ahead. June's move was the largest U.S. rate increase in 3 decades, 75 basis points. The minutes indicate Fed officials viewed maintaining their credibility to control inflation as crucial, and they backed raising rates by another hefty 50 or 75 basis points in late July, with more to follow, perhaps more than had been anticipated. Vinny Del Giudice, Bloomberg Radio.
10-year yield 2.92%, S&P up 34, a gain of 0.9. The Dow up 218, up 0.7. Nasdaq up 109, a gain there of 1%. 10-year down 31 seconds. Again, the yield 2.92% on this FOMC Wednesday. Spot gold down 1.3%, 17.41 the ounce. A retreat for crude now with a 98 handle, 98.66 a barrel, down 84 cents, down right now by 0.8%. As for some of the big oil stocks that we are following for you today, for the most part, in fact, all of the oil stocks that we quote on a regular basis, they're lower. ExxonMobil, for example, down 1.5%. BP, its ADR is down 1.4%. Chevron down 0.9%. Pioneer Natural down 1.6%. And EOG Resources down 3.1%. Recapping, stocks rally, best level of the day, S&P up 35, up 0.9. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. As we teased, we do have Bloomberg News technology reporter Mark Gurman on the line. This story hit at 1 p.m. Apple launches iPhone security tool to block targeted attacks. Mark, walk us through what lockdown mode is and what exactly a high-profile Apple user is.
So those are some good questions. First of all, thank you, as usual, for having me. So I want to take a step back. Apple sued a company called NSO Group last year. It's an Israeli-based company. It develops a software tool called Pegasus. And what this tool can do, it could allow states and other entities and governments and what have you to spend hundreds of thousands of dollars, if not more, to do a targeted attack at certain individual, whether these are other government officials, whether these are billionaires, whether these are activists, right? This was software that may have been used in the hack of, perhaps Jeff Bezos' phone a few years ago, if you remember that. There have been government officials working in Uganda that have been targeted, right? These are individual targeted, non-widespread attacks. And the way these hackers get into these phones is they use vulnerabilities in messages, over text messages, over FaceTime calls, over web browsers, right? Certain code, certain types of attachments, images, PDFs that inject that vulnerable material that allows them to remotely hack your phone. So what this lockdown mode does is it removes those potential access points. It removes a lot of functionality from the Messages app. It removes certain functionality from Apple online services. It removes certain functions in the web browser, right? If you want to speak to someone over FaceTime, they can't call you unless you previously called them within 30 days. So this really limits all the places that NSO Group and Pegasus and other spyware could be used to attack you.
Mark, I'm fascinated by this company, NSO Group. Now, this is a legitimate company, right? It's not some group of hackers or somewhere who have developed this spyware. Is there a legitimate use for their software, or is it all for sort of nefarious stuff like this? And if so, is anyone trying to shut them down?
Well, Apple is trying to shut them down via their lawsuit, right? They want them to stop making this Pegasus software that is used for these purposes, right? But to your point, they are a legitimate company, and they have been used by governments around the world to try to, stop criminals, right? Kidnapping situations, terrorism, things of that nature, right? So there are circumstances in which you might think the NSO Group is doing something positive, but obviously this technology can be used with the right amount of money and by, the right people, or I should say wrong people, for nefarious purposes.
I don't know. I'm still stuck on the high-profile user bit. Mark, you described that in your story as an activist, a journalist, government official. I am curious, though, what about a celebrity, for example? Because, celebrity phones get hacked all the time. Would this be available to them? Could they buy it, potentially?
Well, I can tell you it's available to me. I have my iPhone in my hand right now.
You're a heavy hitter.
It has nothing to do with that. So iOS 16, this is the update that's coming out in September. There's a new beta version called Beta 3 that came out today. And if you go to your Settings app, and I'm doing this right now live, there's a tab that says Privacy and Security. You press that, you scroll to the bottom, and there's a new field called Lockdown Mode. You click that, and you can turn it on, and it tells you everything that's going to happen in this lockdown mode. It says messages. Most message attachments are blocked. Some features are not available. Incoming FaceTime calls from people you've not previously called are blocked. If you need to use a cable to connect your phone to something, you need to put your passcode in. You can't connect this to, an enterprise unless you've previously been connected to that enterprise. That's for mobile device management. Some web tech and browsing features are blocked in Safari. Incoming invites for Apple services from people you haven't previously invited are blocked. And it makes you read through those qualifications of what's done in lockdown mode, and then you can press turn on lockdown mode, and it will sort of lock down your phone. So you have less access points for hackers to penetrate your device.
Mark, quickly, we don't have much time, but you write that Google offers a similar tools for high-profile users. I'm wondering, did that sort of force Apple's hand, do you think, to sort of play catch-up with Google on this?
I don't think Apple's playing catch-up here. I think that, Apple's tools and Google's tools are sort of apples to oranges, if you will. This is a pretty advanced system what Apple has here with lockdown mode. What Google does, what Apple has also done, is they have a threat notification. So if your Google account or Google device has been hacked, you can get an alert from Google, and Apple's offered that as well.
All right, Mark Gurman, Bloomberg News technology reporter. Got to leave it there. He was talking about Apple's new iPhone security tool to block targeted attacks. If you're a high-profile user, we'll look for a good definition there. Apple shares up 1.6% at the moment. This is Bloomberg Business Week. Let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in Washington, D.C.
Thanks, Katie. Former White House counsel Pat Cipollone has agreed to testify before the House January 6th committee. We get the latest from Bloomberg's Nathan Hager in Washington.
A source tells Bloomberg News Cipollone has reached a deal to sit for a closed-door interview Friday after being subpoenaed for his testimony. Cipollone has emerged as a subject of interest for the panel in recent weeks. Committee members say he was at the center of a number of events related to the Capitol insurrection and then-President Donald Trump's activities that day. Cipollone has spoken to the committee before, but not on the record. That'll change at the end of this week. In Washington, I'm Nathan Hager, Bloomberg Radio.
A bond hearing was held this morning for the accused Highland Park July 4th parade shooter. Lake County State Attorney Eric Reinhart spoke to reporters immediately after the hearing.
Based on the information that the investigation has produced so far, the judge found that the evidence was at such a level that he could be held without bond. Also, because the fact that it is a mandatory life sentence.
Reinhart says a preliminary hearing has been set for July 28th. He also says the suspect did confess to the shootings and apparently thought about conducting a second mass shooting in Madison, Wisconsin. Boris Johnson says he will not resign as the British Prime Minister despite a slew of resignations within his government in the past few days. An official tells Bloomberg Johnson intends to fill the empty cabinet positions and government positions, including those 2 vacant cabinet posts. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right. Well, Mike, I hear Sun Valley is going on, that big conference for billionaires. It seems like summer camp, I've heard it described as.
Someday we got to get to that, Katie.
I know. Yeah, I didn't get the invite, but, we do have Ed Ludlow there. We have Shonali Bassick, I know, is there as well from Bloomberg TV. And, I mean, this event, you can make fun of it, but it always makes headlines. And we have an interesting story. The head of Warner Brothers Discovery said that the media industry will focus on creating fewer, better shows as the streaming TV wars enter a news phase after Netflix's surprise loss of customers earlier this year.
Yeah, it's interesting. He also discussed some of the changes at CNN, the 24-hour news channel, posted somewhat tepid ratings during the recent January 6 hearings. And he's saying that they're looking to reinvent themselves as a channel appealing to both sides of the political aisle under its new CEO. So imagine that, a little both sidism there for CNN. That'll be interesting to see how that develops.
Yeah, David Zaslav, of course, he is the Warner Brothers CEO. And he said, of CNN, Chris is doing a great job. That is new CEO Chris Licht. I think I said his name right. I hope so.
As far as I'm concerned, you did. That's right.
And anyway, Zaslav says that he's doing a great job pivoting CNN journalism first. America needs a news network where everyone can come and be heard. And of course, Zaslav, he's just among several high-profile media moguls who are expected to speak at this conference. It's just kicking off, and unfortunately for us, Mike, it is invite only.
Yeah, that's right. Some interesting comments towards his rival Netflix there. He praised them for what they call so-called appointment television by releasing hit episodes of shows like Stranger Things in installments rather than making the entire season available for streaming at once online. And that, Katie, explains why my kids have been glued to Netflix for the past couple weeks.
Oh my gosh. I get releasing it in installments, but, as a consumer, sometimes it is fun.
You like the binge?
I do. It's more satisfying that way. But in any case, Sun Valley just kicking off. We'll continue to bring you updates.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, and NASDAQ all advancing 13 minutes to go ahead of the closing bell. And FOMC Wednesday, stocks are rallying. Stocks gained, Treasuries slid as investors grappled with fresh economic data that showed slightly slower growth, prompting some to consider the Fed's reiterated hawkish stance in its June meeting minutes as outdated. S&P up now by 25, a gain of 0.7%. The Dow up 161, up by about 0.5%. NASDAQ is up 71, higher by 0.6%. The 10-year yield 2.92%. Spot gold now down $23 the ounce to $17.41, a drop of 1.3%. West Texas Intermediate crude oil down 1%, $98.47 a barrel. Recapping, S&P up 22, a gain of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Well, thank you, Charlie. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
With Russia showing little sign of easing its assault on Ukraine, providing military support to Kyiv remains the West's top priority. Yet delaying civilian reconstruction until the war's over would be a mistake. Significant areas of Ukraine are largely free from fighting. Leaving them depressed would only prolong Ukraine's dependence on aid. Western support for reconstruction would also help the war effort by allowing the Ukrainian government to focus on keeping its troops supplied. And there's plenty Western allies can do now. For example, in areas where violence has subsided, outside experts could help demine farmland. Rebuilding Ukraine would serve as a potent symbol of unity within the democratic world and a message for future aggressors. Getting that work underway as soon as possible is critical to holding down costs, limiting waste, and helping Ukraine's people realize a brighter future. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we are 10 minutes away from the closing bell. Helping us bring it over the line is Lisa Erickson. She is head of the Public Markets Group of U.S. Bank Wealth Management. She joined us on the phone from Minneapolis. Lisa, great to have you with us. I'm looking at an S&P 500 that is about 0.6% higher, obviously with some pretty par for the course intraday volatility, which is saying a lot because it feels like things have been really volatile. How do you have any conviction in day-to-day moves in this moment?
Well, to your point, it really has been a rougher period with just a lot of price volatility and a general downward trend. We are really overall cautious still on the U.S. equity market, and that's really on the back of just a number of forces that are causing, we think, a continued force more on the downside as opposed to the upside. And those would be chief among those. First, the Fed policy, where obviously they are needing to tighten to combat still elevated inflation. But on top of that, you also have decelerating growth numbers. And while many of the indicators are still in growth territory, what we see month over month or quarter over quarter is a lot of those numbers are coming down. So you've got both growth not looking quite as attractive as well as just a more difficult monetary environment in terms of interest rates and inflation moving up.
You know, Lisa, you mentioned this slowdown in the momentum for economic growth. The one interesting thing is that earnings expectations still remain sort of a bright spot for the market, though I think Katie will agree, it seems like almost everyone we talk to doesn't believe these numbers. They expect analysts to potentially have to lower their estimates for the rest of the year and next year. Where do you stand on that? Is there any chance that the analysts are actually right about earnings, or are you in the camp that believes they have to come down?
We do see some downside risk on the earnings front as well. And while companies have generally been pretty resilient, both in terms of their profit margins as well as their ability to eke out overall growth, as you note, those earning estimates still remain high. And so essentially what we have is a situation where if you look at the second quarter expected numbers, those actually have been ratcheted down a little bit, but the full year numbers are actually, to your point, still going up. And so what that means is companies are actually going to have more pressure to perform in the second half of the year. And again, given what we're seeing on a macro environment, and again, with the Fed tightening, they're just going to have some headwinds to hit those numbers.
And Lisa, let's turn to fixed income. It's one of my favorite topics. Mike and I were talking a little bit earlier that if you look at where money is flowing in fixed income, you're starting to see some love for the intermediate part of the Treasury curve, sort of that 7-year to 10-year sector. Wondering if you're also on board with that trade right now.
Well, we do think in an environment like today where there is just more uncertainty and it's a little harder to predict where things are going, but with potentially more of a downward bias for the economy, we think sticking closer to home and sticking closer to benchmark does make sense. If anything, we would actually advise clients, all other things considering, to be a little shorter in duration. Again, just because we do see, the general trend for rates being up in the fixed income market.
Lisa, how about allocations between the two? Do equities look more attractive, or does fixed income look more attractive? If you were sort of managing a 60-40 portfolio, would you be thinking of changing that allotment at all?
Well, right now we are actually emphasizing to a greater degree fixed income. And while interest rates going up just is hard for all markets, whether it's bonds or equities, overall, with our more cautious outlook on what's going on in the economy, we think making a little bit more emphasis on fixed income is just sensible, simply because there's a greater proportion that you're getting of return from income, and having that stable cash flow and having it in instruments with historically lower volatility like bonds compared to equities makes more sense at this time.
And Lisa, when you look into the equity market against that backdrop that you laid out of, steadily rising interest rates, rising yields, where within the equity market does well in that environment? Where are the opportunities right now?
Well, in the nearer term, we actually see some of the more cyclical sectors as interesting, only because, again, while we are starting to see some signs that inflation is coming down, price pressures overall still are elevated. And so in that kind of environment, many of these more cyclical or economically sensitive type sectors can benefit due to the price increases that they can pass through. And so it's a little bit more their time to shine in the sun. And so that is more of a nearer term interest. For our clients, though, with longer term horizons, we are, though, starting to see some interest again in those secular growth names like technology or some segments of communications. Obviously, over the past few months, they've really had a rough ride. And so I think for clients who can look out to a longer time horizon, the opportunity to take advantage of those depressed valuations is interesting.
So sort of a straddle between both growth and value, I guess. You don't necessarily have to jump to one side of the boat or the other. You can look for opportunities in both factors, perhaps.
Yeah, absolutely. And again, I think to the extent that you can just extend that time horizon to a longer term objective, some of those growthier names becomes more attractive.
And Lisa, something that we've been talking about all week, somehow it's only the second day of this week. I think it's only Wednesday. Amazing. But in any case, it seems like the narrative in markets has shifted to being worried about inflation, to being worried about growth, the risk of a recession. And, when you size those two up against each other, what do you think is the biggest concern in markets right now, at least from your perspective?
Yeah, that's a great point, Katie. And really what we're looking here in the second half of the year is, to your point, really more of the risk on the growth side. I think it's become recognized that we have some price pressures, and hopefully, while they may stay elevated, they'll subside to some degree. But really our concern has been what we would call the second repricing. We've had the first repricing as equity multiples have come down, as interest rates and inflation have been elevated and moving up. But again, to your point, Now, if the second domino falls and we really get some downtrend in those earnings estimates, then you've got another reason for prices to drop further.
All right, Lisa Erickson, great to get some time with you as we count down to the market close. That is Lisa Erickson. She is the head of the Public Markets Group at U.S. Bank Wealth Management, joining us on the phone from Minneapolis. And we're looking at an S&P 500 off its highs of the session, still hanging on to gains of about 0.3% as we are just about 2.5 minutes away. I'm looking at yields also marching higher and a 2s10s yield curve that is still inverted. We are going to break that all down as we await our Beyond the Bell simulcast. It is our cross-platform coverage of the market close with our colleagues from Bloomberg Television. This is coming up. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast, and we're joined right now by Katie Greifeld and Mike Regan filling in for Tim Stenovic and Carol Master. We welcome our audiences across Bloomberg Television, radio, and YouTube to parse the crucial moments of the day. Stocks right now, Katie and Mike, clinging just a bit here to some of those gains.
Clinging is a good word for it. The S&P 500 up just 0.3%. A lot of intraday volatility again, and yet a VIX that continues to fall below 27 at the moment.
Yeah, it's sort of a weird complexion of the movers in the market. We've got utilities and tech leading. Seems like an odd pair to be leading the gains. So not really much decisiveness as far as it comes to moving into growth or moving into value. Undecided on the day, Taylor.
Certainly some decisiveness when it comes to the bond market. Caroline, we've been talking all day about, well, since those post-meeting minutes, of course, that came out at 2, it is firmly yields higher, pretty much all across the board. You're up 10 to 15 basis points. But the long-term trend, as I was speaking with Mike Contopoulos a little bit earlier, has been really range-bound between about a 270 and 280 up to about a 350 or so.
Firm bonds lower, yields higher, firm dollar higher as we see a more hawkish Fed on that side of the equation, and Bitcoin not doing much, still at 20,000.
I think some of the moves you've been seeing today in the FX space with the dollar stronger once again, and of course some of the moves that we've been seeing in the commodity space with the drop in some of those base metals as well as in energy are certainly having an impact on market psychology. But still, this is a market that's still trying to feel its way around, trying to figure out what comes next for the economy. And the Fed, a meeting still a couple of weeks, about 3 weeks away. The Dow Jones Industrial Average looks like it's going to finish the day higher here. After being lower earlier in the day, it's going to finish higher by about 0.2%, up roughly 70 points here as we wait for these numbers to officially settle. But you get the gist. The S&P 500 up about 14 points or 0.4%. And the NASDAQ composite going to finish the day higher by about 0.4%. Meanwhile, the Russell could not quite get into the action today. It's been lower all day long here. It's going to finish the day lower, down about 0.8%, roughly 14 points on the day.
Yeah, it's interesting that small caps just couldn't join in on the party. Also interesting that these gains, this intraday volatility, came on the back of pretty light volume. I don't know. It seems difficult to have any sort of conviction here.
It feels a little bit defensive. I hate to say that when we think about sort of the broad-based rally that it was, but if you take a look at some of the individual sectors for our radio audience, the quote best performers and the worst performers, it's utilities, technology, semiconductors, software and services. Those are up 0.8% to about 1% or so on the day, even in the face of higher yields. Is that defensive? What is that? Is that sort of a rebound of given the sort of the massive sell-off that we've had year to date? Down at the bottom, though, does look classic risk off. If you're thinking about banks, some of the auto components, the big energy sector, those are off about 1.75%, Katie.
Well, I tried to bring you guys a diversified portfolio of movers. Let's start with Microsoft, up 1.3%. Don't have a satisfying reason why, but it is the biggest points gainer in the S&P 500. Bank of America actually cut its price target on Microsoft today, but still shares rallying by over 1%. Also wanted to point out Rivian. This was an interesting one, and I do have a reason why this stock is higher. The EV maker reaffirmed its production target for the full year. It built 4,400 vehicles in the second quarter. It's on track to produce 25,000 units in the full year. That boosted Rivian shares by over 10%. And let's end with Rocket. So this is a mortgage finance company. It earned an upgrade from Wells Fargo all the way to overweight. Analysts there said, while the residential mortgage market remains extremely challenging, Rocket should be a beneficiary of that. It also said that negative center in the space overall, maybe it has peaked. Rocket was able to hold on to gains of about 4.4%, Mike.
Yeah, Katie, and obviously with oil falling again today, that energy sector, the best performing group of the year, is leading on the downside again today. The biggest mover there on the downside is EOG Resources. But I also wanted to point out a couple casino stocks. Caesars Entertainment and Penn National Gaming, both of them are off more than about 4%, 4.5% for each of them. No fresh news, but there was a report out yesterday from an analyst at Roth Capital who said regional casino demand is starting to show cracks. They expect second quarter earnings to be at or above street estimates, but the analysts there are saying commentary around the third quarter and the second half of the year is much more cautious, probably amid all of this recession talk.
And overall, Mike, we do see commodities having, well, quite across us an interesting time of the day. And I want to talk about some of the losers in that respect, because we have seen Brent crude oil off for the day. We're down by 2.4%. This once again speaks to some of the recession risks that you're seeing played out in some of the, well, key travel stocks and worries about the consumer. You're seeing once again the worries about a global slowdown playing into Brent 2.4%. But we are above that $100 a barrel level. And again, copper having a terrible time of it, still down about 6% over the last couple of days. Gas oil, heating oil on the downside. Overall, we are, though, still seeing this as an FX story as well. When you have dollar really seeing the strength that we're having at the dollar index at the highest level in more than 2 years, no wonder you're therefore seeing some of the commodities sell off. We have got the euro therefore weakening by 0.8%, unbuyable. Some of the pros call it. You're also seeing a dollar index, as I say, fall 0.1% higher, and really some of those commodity-related FX pairs on the downside. The Kiwi, for example, weaker by 0.3%. A mixed message coming from sovereign bonds, Taylor.
You really see, while not a mixed message, when it comes to U.S. full faith and credit, it is firmly yields higher. You have a 30-year yield rising 9 basis points, but really the focus after those Fed meeting minutes, Katie, has been on the front end of that yield curve of 15 basis points. And I think what's incredible is you think this feels like a rate of change. This feels like volatility. We had this type of volatility June 13th, right? Right in the middle of some of the last Fed meetings, of which now we're just getting the minutes from. And so really when you put this into perspective, nowhere near the volatility that we've had as of late, and that highlights sort of the big moves that you've seen in the MOVE index, Katie, of course, relative to the VIX index as well.
Absolutely. I mean, the size and scope on Treasury volatility, we're back at 2020 levels, basically, whereas the VIX, I mean, it can't even get above 30. It's interesting, though, Taylor, and you highlighted this, that most of the sell-off in the bond space today came at the short end of the curve, whereas, you know, you also saw some of that longer-dated debt sell-off as well. Not as much, though, and that is a recipe for curve inversion. We're there, 5 basis points.
Well, we're there, and I think the messaging has been clear and has been consistent out of the Fed, and we saw those minutes here, of course, coming off that 75 basis point hike that we had at the last meeting, and the idea that we're probably going to get another 75 basis points. There was nothing in there, at least not that I saw, Carol, that would make anyone sort of think that the Fed would shift course right now.
Should we talk about meme stocks just for a moment? It's been a
Sure,
while
why
since we've
not?
done it. GameStop, you'll love this, Romaine.
Yeah.
Reporting a 4-for-1 stock split.
A 4-for-1 stock split?
4-for-1. I think we had guidance that would be
Is
looking
this a
to
turnaround
look.
plan?
This is making it even more appetizing for those
Okay.
retail investors. Look, as we know, nothing fundamentally changes when you
Yeah.
do a stock split, but
Right.
it does make it potentially more accessible for retail investors. So as we know, GameStop announcing a 4-for-1 stock split.
Did they not have any retail investors? I thought it was all retail investors in that. Are there institutional investors?
Maybe they went to what was it, Bed Bath & Beyond?
Bed Bath & Beyond got lost, and now they're trying to find their way out the Beyond section and into GameStop. I mean, look, we talk a lot, of course, about the way these companies have been splitting their stocks to try to make them a little bit more attractive. And I think there's a broader issue, too, that, guys, that we have to talk about is how some of these companies that are kind of a few tiers down sort of manage themselves in this environment. We know, I guess, we have some assumption how an Apple can do, or how, an Alphabet or something like that can sort of fare in this environment. But with those companies that have maybe not as strong of a balance sheet or strong of a growth story, how do they hold up there?
We were talking just this morning, Romaine, about the meme stocks and sort of the quietness that it had been as of late. And Mike, you wonder if this
we
is
have
sort
a whole
of
meeting together, me
bringing
and
it
Taylor, without Carolina.
back.
We just talk things. So, yeah.
Unbelievable.
We're actually talking to kids today. You know, they're not kids. I mean, they're interns, right?
They're
Yeah, we were
20-year-olds.
giving them inspiration, you know, because this show is nothing more than just about the kids, you know, and helping the youth get their full potential. In fact, this is what I did all weekend.
But
You know?
to be fair,
Yeah.
to be perfectly frank, this
Yeah.
is a worry for me that the fact that we are seeing so many people burn in the current market anxiety. When you've been, whether or not your first purchase of an asset often was crypto. That was certainly about amongst the Black American community. 1/3 of sub 40-year-olds who are Black Americans bought crypto. If you're then being wiped out, are you then still going to want to build your wealth when it comes to getting into various actual, real stock markets, whether indices, you like it, the ETF world that Katie lives in?
Well, that's a really interesting question, and sort of the optimistic take when this meme stock phenomenon was happening in 2020 into 2021 was that, okay, people are getting introduced to the market. Hopefully this evolves into them actually investing, not just trading. But Carolyn, I think that's a really important and, potentially, has huge ramifications, whether if you get wiped out, does that just cause disenchantment? Do you come back in or do you just stay out?
What did the interns say, Romain?
Look, they're positive. I'm going to turn this back. You guys are so Debbie Downers. They were great. And, look, and I think Caroline makes a great point here about kind of the distortion that some people had because of that sort of bull market where you can just throw a dart at the board and make a lot of money. And obviously, we know times are changing right now here. And, I just want to point out, too, we were actually having this conversation, not to plug, the Boston Post, but we were actually having this conversation while we were out there. We weren't just talking about the 4th of July and everything, but we were talking about stocks, too, and how it goes up. And
But
kind
not
of
to
the
plug it,
revival.
right?
Not the brand. It was a great show. Did you watch it? What was your favorite part? You, thank you. And it wasn't just
Do we
me.
have to wait a whole year
Kaylee Lyons
for that
was on
to come
stage there.
back?
She did a great job. Joe Shortsleeve, who is just the pride of Boston, was there. He did great. He actually hosts a radio show out there in Boston with some guy, I think his name is Tom Maroney, but Joe is the real star of that show out there in Boston.
Joe Shortsleeve might be even a cooler name.
And that's his
than
real
Romain
name, believe it or
Bostic.
not.
I know, it's pretty cool. I mean, it's no Katie Greifeld, but in any case, we do have to go, you guys. That does it.
Greifeld. That name sounds
Greifeld.
familiar.
Yeah,
Anyone
there's
famous
a few
associated
of
with
us
that
out
name?
there. I mean, there's me, the famous one. In any case, that does it for our
Oh,
cross-platform coverage
Wow.
of the market close on Bloomberg Television,
call
radio,
after the show.
and YouTube. We're going to be back tomorrow at the
we?
same time.
Are you both
same
of you
place.
back tomorrow?
It's a mystery. Remains to be seen. You'll
Okay.
have to tune in.
All right. Shout out to Boston.
We'll see you
Great
guys.
city.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's get right to Nancy Lyons in the 99.1 newsroom in Washington, D.C.
Thanks, Katie. Authorities say the suspect in the deadly July 4th parade shooting in Highland Park, Illinois, apparently had plans to commit another mass shooting the same day, but changed his mind. Robert Crimo was in court today. He's facing 7 counts of first-degree murder, but authorities say more charges could be on the way. Lake County State's Attorney Eric Reinhardt also told reporters Crimo confessed to the shooting.
His statement was voluntary. He was questioned in the Highland Park Police Department. He was read his Miranda warnings, offered attorneys, etc. He went into details about what he had done. He admitted to what he had done.
Eric Reinhardt says Crimo will remain behind bars until his next court appearance in August. Former White House counsel Pat Cipollone has apparently agreed to testify behind closed doors this Friday to the House committee that's investigating last year's assault on the U.S. Capitol. Bloomberg's Washington correspondent Joe Matthew says Cipollone's name came up quite a bit during last week's hearing from another Trump insider.
Former White House staffer Cassidy Hutchinson described before the committee last week Cipollone warning Chief of Staff Mark Meadows that the plan to block the certification of Joe Biden's election victory was unlawful.
Bloomberg's Joe Matthew. The next public hearing from the committee will be held July 12th. Bloomberg has learned the U.S. and its allies have talked about trying to cap the price on Russian oil between $40 and $60 a barrel. They are aiming to limit Russia's oil revenues while minimizing the impact on their own economies. The U.S. is also said to be weighing some potential enforcement tools, including possible restrictions on shipping companies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, so this is an interesting story. So Manhattan home prices, they hit a record, even though the sales frenzy is winding down a little bit. Data from appraiser Miller Samuel Inc. and brokerage Douglas Elliman Real Estate showed that purchases of condos and co-ops closed at a median of $1.25 million. That's in the second quarter.
$1.25 million.
That seems like a lot.
That right
Is
there.
that the median in Metuchen, New Jersey?
This explains why I live in New Jersey for sure. But 3,834 transactions, a 12% increase from a year earlier, most for any second quarter since 2007. President of Miller Samuel, however, says it's a quick pivot from an overachieving market to a market that's being challenged by an unprecedented amount of uncertainty. So real estate market is just like the rest of us. They have no idea what to expect for the rest of the year, I guess.
It's brutal out there. Yeah, so Manhattan's post-lockdown buying surge cooling fast. There's a drop in new contracts. It began in April, and in June, deals were down 29% year over year to 932. That was from over 1,300s. And Miller did point out that the spike in interest rates, inflation, economic uncertainty, the war in Ukraine, the list goes on, all part of the things that the consumer and potential home buyers have been grappling with.
This is a stat that's pretty amazing to me, Katie. The share of sales being conducted in cash reached 53% in the second quarter, the third highest proportion on record. So not only are people shelling out $1.25 million for a home, most of them are paying cash for it. I gotta figure out what's going on. A lot of people doing better than me out there somehow.
It feels like it's on fumes. I don't know. Anecdotally, I know a few different people who are trying to offload some real estate in Jersey City too, just across the river, and having a really difficult time doing it.
Yeah, even in the Garden State.
Even in the sunny, beautiful Garden State. I don't know. We'll see. But it's still inexpensive to buy in Manhattan. You're listening to Bloomberg Business Week on Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks finished well off session highs, but still in the green. Third straight day of gains for the S&P as investors parsed economic data that hinted at slightly slower growth, prompting some to brush off the hawkish stance that the Fed reiterated in its June meeting minutes as outdated. S&P up today by 13, gain there of 0.4%. The Dow up 69, up 0.2%. NASDAQ up 39, a gain of 0.4%. 10-year yield 2.92%. Spot gold down $24 the ounce to $17.40. Drop there of 1.4%. West Texas Intermediate crude oil 98.64 a barrel, down 0.8%. After the bell, GameStop announced a 4-for-1 stock split. After ours, we've got GameStop up by about 1.5%. And Ken Langone, the co-founder of Home Depot, says the U.S. is already in a recession. His remarks coming at Sun Valley. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Let's turn now to Michael Nilskyla. He is the founder and chief executive officer of Save. He joins us on the phone from Scotland. I understand it's quite late there. Save is an ultra high yield investment savings account, FDIC insured. Michael, great to have you on Bloomberg Business Week. I want to start really simple. Where do these ultra high yields come from?
Yes, hi there. Thank you for having me, first of all. Yes, so just to describe Save, we're basically a savings platform that enables better returns, and you can call them high yield potential on your FDIC insured account. Where do they come from? These are effectively replacing what you normally have as your interest, and your interest typically that you get on your account comes from a borrowing and lending activity that the bank does. So they'll take your deposit and place it in the bank, and then they'll ultimately lend it out either back to the Fed or to other banks or to individuals through mortgages, etc. So that will be a typical bank activity. In our case, we're just replacing that activity with investment activity. And as you are aware, every time you replace, let's say, bonds instead with equity market exposure, you can expect higher returns.
So this is, Michael, when I hear higher yield and higher interest rates, I assume higher risk. Is there any risk here that we should know about?
No, again, the deposit is fully FDIC insured. The only difference would be that you have a higher return potential. But of course, now the risk, if there is any, is that you may get, but that the equity markets may not perform over time. But equally, you would have seen that during COVID, that rates went to zero. So that was a different market trigger, of course.
And so who are your customers here? I mean, is this for consumers? Is this more for banks? Who are you trying to target?
Well, this is really for anyone and everyone looking for higher yields on their FDIC-insured savings account or any account that is in that category. If you think about where the macroeconomic factors are right now, you've got high inflation, you have rates that are going up, but they're not compensating for the inflation. So you've got a large cohort of individuals and others looking for accounts that yield or give you a higher potential for yield.
So, Michael, why don't you give us a little bit of the history of Save here? When exactly was the launch, and how big is the deposit base currently?
Yeah, so we launched about a year ago. We initially launched a debit card that was generating yields through transactions, which was very successful. We now have over 30,000 individuals who are customers of Save. That history in terms of creating this product really comes from learnings out of the banking world when you look at products that are out there, whether they're in the credit card space or savings space. When you aim to maximize the return for the customers, typically you end up losing a lot of those gains along the way, meaning either they are eaten up by legal costs or regulatory costs. So we built a way of of allowing these deals to come directly to the customer and therefore maximizing those. And so it's been a very big success. We are expecting, we are launching, we're taking on the first deposits this week and next week. And we have a base of over 150 million, representing around 9,000 customers waiting to put on those deposits.
And I'm curious, I mean, how does Save exactly make money in offering these ultra high yields? What is Save's business model?
Yeah, we've also done it differently, meaning if we look at any market investment out there, we wanted to introduce a concept of fairness, which means that we are effectively putting together portfolios for you, and we're saying here's the potential for returns. But equally, we should be responsible for those returns. And so our fee is a fee that is based on if there is a positive performance, i.e. if the customer is happy with the returns. So only in the case of a positive return do we charge a fee. Otherwise, our fee is zero.
And Michael, I know you have a background in derivatives. What kind of portfolios are we talking about here? Are they just sort of vanilla equity portfolios, or is there some options involved as well?
Yeah, so what we have is it's all ETF, typical ETFs, liquid ETFs. So we don't really deviate from what you see at larger robo-advisors or large wealth management accounts. But we do have different themes, and the main theme we have so far is you look at global diversified portfolios, investing in stocks, bonds, commodities. What you have in parallel to that is an ESG portfolio, which we couple with a planting of a tree for every $1,000 deposited, and these trees are planted in upstate New York, so this is not very far. It's not somewhere on the other side of the world. And then the third one is what we call an alternative strategy, which is really meant to generate returns in a recessionary environment. So think of the environment where we're right now, potential for stagflation, potential for a recession rather than a soft landing. In those cases, we aim to have an account that ultimately then generates return from a sideways or a downwards trending market.
All right, very interesting stuff. That is Michael Nelskila. He is the founder and CEO of Save. He joined us on the phone from Scotland. Really appreciate you staying up late to talk to us. You're listening to Bloomberg Business Week. This is Bloomberg Radio. We have much more coming up.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Mike, do you have any vacations coming up?
I do not. I had a big one in the spring.
Okay.
But just kind of staycationing for the summer, if you will. Right here in the studio, actually.
Yeah, I'm sure. It seems like everyone but us is taking a vacation right now. A bit of a summer of discontent, at least from the airline's perspective. But we're going to talk to the CEO of Trivago about what he sees in just a couple of minutes. But let's first get to Charlie Pellet for some news.
Hi, thank you very much, Katie. Here's what's going on. The Dow, the S&P, NASDAQ all advanced today. In fact, the S&P gained for a third straight day as investors sifted through the economic data that hinted at slightly slower growth, prompting some to brush off the hawkish stance that the Federal Reserve reiterated in its June meeting minutes as outdated. Today, the S&P was up 13, up 0.4%. The Dow up 69 today, up by 0.2. NASDAQ up 39, a gain there of 0.4%. 10-year yield 2.92%. Spot gold down $25 the ounce to $17.39, drop there of 1.5%. West Texas Intermediate crude up 1.4%, down 1.4% today. WTI now with a 98 handle, 98.11 on West Texas Intermediate crude. Well, as for the overall mood of the market, Lisa Erickson is head of Public Markets Group at U.S. Bank Wealth Management, and she was our guest right here on Bloomberg Business Week.
We are really overall cautious still on the U.S. equity market, and that's really on the back of just a number of forces that are causing, we think, a continued force more on the downside as opposed to the upside. And those would be chief among those. First, the Fed policy, where obviously they are needing to tighten.
GameStop shares rallying after hours, up now by 2.1%. GameStop announcing a 4-for-1 stock split in the form of a dividend. British Airways is scrapping another 10,300 flights through the summer peak travel season as the carrier struggles with an ongoing staffing crisis that has contributed to travel chaos across Europe. Today, we saw IAG, the parent of British Airways, its American depository receipts advanced by 1.2%. Recapping, 10-year yield 2.92%, S&P up 13, up by about 0.4. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Joining us now is Axel Hefer. He is the Chief Executive Officer of Trivago. He joins us on the phone from Germany, another night owl, joining us on Bloomberg Business Week. And Axel, I mean, it feels like all of the headlines recently have been about staffing shortages at airlines, flight delays, soaring fuel costs, also eating into their bottom lines. But from your perspective, from your unique perch, I mean, has that affected travel, summer travel at all?
Yeah, I mean, it's a very interesting point in time, to be honest, because we are coming out of the pandemic and everybody was looking very much forward to the summer travel. And you see actually a very strong demand for summer, but on the other hand, you also can see that the experience is not good. Prices are very high. You have, as you said, you have labor shortage everywhere, so the outlook is actually not that good.
Yeah, Axel, is there any sense of when things will get back to normal? This has just been a really nasty summer, as Katie said, for delays and cancellations. Is there any light at the end of the tunnel that you can see?
Yeah, I mean, it's not that easy, to be honest, because I mean it's not only in the travel industry. I mean, you've got labor shortages pretty much everywhere, and I mean to me the question really is how do you get the world back into balance? Yeah, so there is a lot more demand than what can be filled by the current staff levels and by supply, and I think we'll probably see a slowdown in demand, have to see a slowdown in demand, and over years, demand and supply will meet each other.
And so, Axel, it's interesting. So Trivago has actual data points here. You have a study that found that 83% of respondents believe that summer of 2022 will be the best yet for travel and adventure. Sort of square that circle for us. How does that sort of be a possibility amid some of the themes that we're talking about?
Yeah, so I mean, in the pandemic, we have seen one thing very, very clearly. I mean, no matter how difficult the situation has been, and no matter how big the health worries have been, people want to travel in summer, and so they need to get a break. They need to break out of their daily routine. So, and that's I think what you can see in the survey that we've run, that coming out of the pandemic, we are all looking very much forward to the summer. But the experience in the summer in many places is actually not that good, because the supply is not able to meet the demand. Plus, obviously, you have all these problems in the world, which are leading to bad service, to high prices. And I mean, for us, that's actually interesting, because we compare prices. Yeah, so in a way, higher prices and a bigger discrepancy in different price levels is for us good, because we can provide more value to our users.
You know, Axel, Katie and I are major market nerds, if they didn't warn you. So we often view every story from sort of the market angle, and the big story this summer is the currency market. Weakness in the euro. It's almost trading dollar for dollar on parity against the dollar, and the dollar at multi-year highs against many currencies. Is that affecting travel trends at all? You know, are we seeing more Americans visit Europe and fewer Europeans visit America this summer?
I mean, you've got transatlantic travel up in both directions, not unexpectedly. So you can't really see that, at least in the numbers that we have. You can't really see that, because you have this overall recovery of transatlantic travel that is just dominating the overall trend. I think it might be something that you potentially will see in the months to come, because you're right. I mean, it got a lot cheaper for Americans to go to Europe.
And Axel, we have just about a minute left with you, and then we're going to come back after the commercial break. But I'm curious, you know, in sort of the data that you've collected, have you seen any difference in how people are traveling post-pandemic, whether that's with someone or, you know, the type of trips that they're taking?
Yeah, I mean, we've got the usual suspects on top of the list. So in the U.S., you've got Las Vegas, Orlando, New York City, all in the top 5. So we haven't seen that fundamental shift. Asia is still not back, because obviously the situation there is more difficult. But other than that, the behavior is much more normal compared to what we've seen last year and the year before.
All right, much more normal behavior. Maybe things are normalizing a little bit. Fascinating stuff. That is Axel Heffer. He is the CEO of Trivago, on the phone from Germany. He's going to be sticking with us as we sort of break down peak travel season. It is the summer, at least in North America, and in this pandemic world that we're living in, people want to travel. Difficult time to do so, though, when we think about what the airlines are going through. In any case, we're going to have much more of that coming back. But before we get there, let's get a check on the latest world and national news with Nancy Lyons. She joins us from the 99.1 newsroom in Washington, D.C.
Thanks, Katie. The accused Highland Park parade shooter is being held without bond following a hearing earlier today. He'll be back in court July 28th to face 7 murder charges. Following today's hearing, Lake County Deputy Chief Chris Cavelli told reporters the parade shooting may not have been the only attack the suspect had in mind the day before changing his mind.
What investigative leads have thus turned up is that while he was driving and he located this celebration occurring in the Madison area, he contemplated another attack with the firearm he had in his car.
Deputy Chief Cavelli says the suspect was arrested once he returned from Wisconsin to the Highland Park area. President Biden is taking credit for a provision in the pandemic relief spending bill that kept pension plans from going belly up. This afternoon, he touted his actions before a Cleveland crowd of trade union members.
The money, the president said, saved the pensions of millions of workers whose companies contributed to industry-wide plans.
Mulder employee plans will remain solvent for decades. Those retirees who lost their benefits will have them restored retroactively. Millions of workers will have the dignified retirement they earned and they deserve.
Pacing the floor with a handheld microphone campaign style, the president said not a single Republican in Congress voted for the pension protection bill. In Washington, Irv Chapman, Bloomberg Radio.
A defiant British Prime Minister Boris Johnson is battling to remain in office, shrugging off calls for his resignation after 2 top ministers and a slew of junior officials said they could no longer serve under his scandal-plagued leadership. Johnson says there are, quote, hugely important issues facing the country. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, we've got a timely story here. British Airways scraps over 10,000 more flights on a staff shortage. This is through the summer season as it grapples with a staffing crisis. Of course, nothing new. We're seeing this both, in Europe and in the U.S.
Yeah, Katie, all I can think of is all those ministers who used to work for Boris Johnson trying to get the heck out of the country and not be able to catch a flight.
Yeah.
But BA has been among the carriers hardest hit by this staffing crunch. Actually dismissed 10,000 workers at the peak of the COVID pandemic. And the latest move comes after the UK government waived rules that require airlines to use airport operating slots or lose them the next season. So it just goes to show, it's so hard to shut down an industry like air travel like we did in the pandemic and then try to restart it and have everything be back to normal.
Yeah, it's just a bizarre time all around. And the airline did say in an email that this new flexibility means that we can further reduce our schedule, consolidate some of our quieter services so that we can protect as many of our holiday flights as possible. So hopefully this is just a summertime thing. And passengers, they're going to be able to rebook with British Airways or another airline. That's interesting. Or get a full refund, it's said. But still, it's huge disruption. I mean, who likes getting their flights canceled?
Absolutely not. And, if you'd wondered why didn't they just cancel these flights when they realized they'd have a staffing shortage? Well, they had already extended their summer timetable cuts to 11%. With this latest announcement, it's eliminated almost 30,000 flights. So just talk about a tough time to be in Trivago too. To try to plan and organize all these trips for people and not know if the flight is going to be there. So we'll have to talk to Axel about that when he comes back.
Absolutely, and of course, this is as BA grapples with strike threats, and I'm sure we're going to see more and more of these headlines break as the summer season rolls on. So definitely something to keep an eye on. Bad news for British Airways flyers, at least.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An FOMC meeting, a minute meeting today, and we did have the Dow, the S&P, and NASDAQ rallying. Stocks did close off session highs, but still an advance with the S&P up for a third straight day. Investors were sifting through the economic data that hinted at slightly slower growth, prompting some to brush off the hawkish stance that the Fed reiterated in its June meeting minutes as outdated. S&P was up 13, up by about 0.4%. The Dow today up 69, gain there of 0.2. NASDAQ up 39, higher by about 0.4%. 10-year yield 2.92%. Spot gold at $17.38 the ounce, down $26 the ounce. A drop today for gold of 1.5%. West Texas Intermediate crude oil 98.18 a barrel. WTI down 1.1%. Briefly, GameStop has announced a 4-for-1 stock split in the form of a dividend, and we've got shares of GameStop up now by roughly 3%. And Apple is planning its largest smartwatch display to date, a bigger battery and a rugged metal casing as part of the upcoming Apple Watch geared toward extreme sports athletes, this according to people with knowledge of the plans. Recapping, a move higher for stocks, S&P up today by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Still with us, I'm pleased to say, is Axel Hefer. He is the CEO of Trivago on the phone from Germany. And Axel, before the break, we were talking a little bit about where people are going. If I look at some of the data that you sent over, Las Vegas, favorite domestic destination. If I look down the list, it seems like there's a theme, and that theme is going to the beach.
Yeah, absolutely. I mean, but that's very consistent to what we've seen the last 2 years. Is really breaking out of the city and going really for a summer vacation where you can relax.
You know, Axel, I hear hot destinations and I think pricey destinations, and I'm really a cheapskate at heart. So I'm curious. Are there any sort of off the beaten track destinations that people are going? Any sort of bargain, hidden gem getaways that we should know about?
Yeah, I mean this summer actually there are no real bargains, to be honest. But obviously you should avoid the top destinations. Yeah, so Vegas, New York, Orlando, Panama City Beach, etc. They are pretty well booked. So the best advice to get value for money is actually to be very flexible, to be honest. Yeah, so to avoid air transportation, go by your own car and then be flexible on the time when you're going and also on the destination.
Of course, if you take a car, you do have to pay for gas, but at least, you know, no one can cancel your car ride, at least not yet. Don't have to deal with that. But exactly. Axel, very aware that you're joining us from Germany. I've talked a lot about the U.S. so far, but when you look outside of the United States, I mean, where are people going? What makes the sort of the summer destination list there?
I mean, it obviously depends a bit by country. I have a similar trend, the usual suspects. So Mallorca for the Germans and the Brits. Dubai is very popular. So really people were, after the pandemic, looking forward to go to their favorite beach destination, and that's what you see pretty much everywhere.
Yeah, Axel, with all these flight cancellations and all the turmoil that's causing, I wonder, does it help to book way in advance, or to your point, is it better to be flexible and almost plan your vacation at the last minute?
Yeah, I mean, the best advice is really to control transportation, because that's the part that is very difficult right now. So really driving is actually the best and the safest. And if you are driving to a destination, you should actually book in advance, because there are a lot of destinations where there's just nothing available anymore.
Mm-hmm. That is so interesting. Yeah, and again, coming off of just a ton of headlines about flight cancellations, flight delays. At least in the U.S., it's not. I don't know. Can you drive to Mexico? I've never tried it.
Let's do it.
Okay.
You can.
Let's just got to get through this show, and then Mike and I are going to research that. But so the summer travel season, obviously in full swing. A little bit difficult, but people are still traveling. Let's push ahead and talk about autumn. I mean, do you have any expectations for how that might go? Any sense that, given some of the difficulties we've been talking about that have been making national headlines, might people just sort of hold off and wait for autumn?
Yeah, so I mean, our expectation is, and I mean, I'm not an economist, so you might know better than me, but our expectation is that the overall economy has to slow down. I mean, we are completely out of balance, and you have obviously very high inflation, interest rates are rising, etc. So the disposable income of many people is coming under pressure. So what we expect is that people will actually try to save money on their trips, which for us, as said earlier, is actually a good thing. And that means that they travel more locally or more regionally, and that they shop around more for the right accommodation.
Yeah, Axel, sadly, after vacation, that means one has to go back to work. And for more and more of us these days, that means actually changing out of your sweatpants and going back to the office and sitting at a desk in your office. I understand Trivago has tried something different. You're doing a sort of hybrid approach to work. Could you talk to us about how you're approaching that and how it's going?
Yeah, I mean, we absolutely believe in hybrid because I guess what we've seen in the pandemic is that actually remote work does work, but we've also seen the shortcomings when we're in remote setups for too long. And we believe that a good balance of focus time remotely and also more flexibility with your family at home, but also in-person interaction to build relationships, to maintain relationships for learning, for coaching, for strategizing, etc., is important. And I have to be honest. I mean, I wouldn't say that we found the silver bullet yet, and every company is struggling with the right balance of the two. And we've originally in last year, we've tried a concept where we said we think 50-50 is actually right. So we wanted people to come in 2 to 3 days per week. We are currently testing a setup where we are going for focus days, where we want everybody to come in so that you actually know that when you're coming in on those days that you can meet pretty much anybody in the company. But I guess it will really take quite a bit more time and a few more years of experience to really find the right balance across all the different teams and I guess for each company individually.
Well, this conversation gets me thinking about, business travel, for example. I mean, what are you seeing there? Is business travel ever going to return to pre-pandemic levels, or sort of like, the office environment itself with some shifting to hybrid work? I mean, is the business travel landscape sort of fundamentally changed here?
I do think so. I think, this is actually different. And I mean, if we go back to 2008-9 and to 2001-2, I mean, we had the same discussions. Business travel will not come back, etc. I think now there is one very fundamental change, which is that even not traveling, I mean, in our core job, we accept that you can actually work remotely, and you can do project updates, etc. remotely, and we do that every week. And so that actually learning will lead to lower necessity for business travel. And the way we are thinking about it, you have basically two kinds of business travel. One is more relationship, sales focused, where you need to meet in person because building a relationship virtually is very difficult. The other one is more transactional. I mean, you discuss a deal, you give a project update, etc., which is a lot of intra-company travel.
Right.
And that will not come back to pre-pandemic levels.
All right, Axel Heifer, it is a great conversation. He is the CEO of Trivago, joining us on the phone from Germany. Again, thank you so much for staying up late. That is going to do it for Bloomberg Business Week Radio today. I'm Katie Greifeld, joined by Bloomberg News Senior Editor Mike Regan. Thank you so much for joining me, Mike. This was so fun.
It was a blast. Thank you, Katie.
All right, well, have a good night. This is Bloomberg.